In today's episode, we are going to talk about the IRS education tax credits, specifically the American Opportunity Tax Credit and the Lifetime Learning Credit. So, as we take a look at these, we're going to talk about what an education credit is, and then we're going to look at each one of the credits, how much it's worth, who's eligible to claim the credit, and then we're going to also take a look at what form you need to file to be able to claim the credit.
Welcome to the Tax Relief with Timberland Bowens podcast. Are you behind on taxes? Is the IRS threatening you or your business? Are you overwhelmed and confused about how to resolve your tax issues? Let's join Timberland as she explains your options and how she may be able to help. Timberland Bowens is America's favorite EA.
Hey, family. Welcome to episode 79 of the Tax Relief with Timberland Bowens podcast. Today's episode is the result of a conversation that I had with one of my tax preparation clients. And this young lady is 20 years old in the state of Virginia, and she's earning scholarships and things to help pay for school, trying to figure out ways to reduce her tax liability as she's starting her business while she's in school. And she came across some information about the education tax credits. And just like a lot of the information that is on social media in video format, short form, I'd say, about taxes, it was a sound bite that didn't exactly explain the whole picture. So, in today's episode, we are going to talk about the IRS education tax credits, specifically the American Opportunity Tax Credit and the Lifetime Learning Credit. So, as we take a look at these, we're going to talk about what an education credit is, and then we're going to look at each one of the credits, how much it's worth, who's eligible to claim the credit, and then we're going to also take a look at what form you need to file to be able to claim the credit. Okay? So let's get right into it. With an education credit, these were designed to help reduce the cost of higher education. Now, if you haven't looked recently, the cost of going to college has skyrocketed. Even since I was filling out my FAFSA about, almost 20 years ago now. What this does, you're not going to get a credit to the school, but instead you'll get a credit on your tax return. Now, keep in mind, a tax credit is going to reduce your tax liability dollar for dollar, whereas a tax deduction is going to lower your taxable income. So it reduces the amount of money that you're taxed on. But I'll say 9 times out of 10, a credit is going to benefit you more. So we have refundable credits and non-refundable credits. What they're going to apply to first is your tax liability. So if you look at your 2024 tax return that you filed last year, at the top of page 2 of the 1040, I believe it's line 16, you will see your tax liability. And then if you have children, you'll see your child tax credit or the other dependent credit, and then any other credits you may have. They go dollar for dollar, canceling your liability. So again, that's what these education credits do. But there's quite a distinction between the two, okay, as far as what affects the eligibility for each credit and then how much each credit is. So the most popular one that people talk about is the American Opportunity Tax Credit. And that's because this is a larger credit and it's also partially refundable, which means if you use your credit and it cancels out your tax liability in full and there's some credit remaining, up to 40% of the credit can be refundable, which means you are going to receive additional money with your tax refund if the liability has been completely canceled. All right. Now, with the lifetime learning credit, it's non-refundable, but keep in mind that with your tax withholding, if you have a credit applied to your liability, you'll get back more of what you paid in. So with either one of these, there can be a win-win. Now, when we're looking at these credits, the IRS does not allow any double dipping. What do I mean by that? You can claim only one of the credits per a qualifying student. Okay, so if you had a freshman last year, you can only claim the American Opportunity Tax Credit or the Lifetime Learning Credit for that student. Okay, no double benefit allowed. So let's start with the American Opportunity Tax Credit because a lot of the people who have asked me about this have students who are in undergrad or they are a student who is in undergrad. So with the American Opportunity Tax Credit, the AOTC, it's for qualified education expenses paid for an eligible student for the first 4 years of higher education. So, with that being said, this cannot be used if a person is working on their master's or their doctorate, or even if they're a fifth year senior. In that fifth year, they won't be eligible for this credit. Okay. Now, you can get the maximum annual credit of $2,500 per student. And if the credit brings the amount of tax that you owe to zero, so like the example that I mentioned earlier, you can have 40% of any remaining amount of the credit refunded to you. So even if you didn't have anything paid in, that's the cool part about a refundable credit. So the max refund that you can get from the American Opportunity Tax Credit is $1,000. So let's say you were already set to get a refund anyway. This would be an additional $1,000 if you had enough of the expenses to qualify for it. Okay. So when we're looking at it, the amount of the credit is 100% of the first 2,000 of qualified education expenses. So I don't know about you all, but when I was in school, I went to a private school, Catholic by tradition, and it cost way more than $2,000 a year, even after the academic scholarships that I had. So for those who are going to private schools, you'll probably hit this easy if you don't have a lot of scholarships to cover everything. But even if you don't have enough expenses to max the credit out, that's just a different type of blessing. Okay. So the first 2,000, 100% of that for each eligible student, and then 25% of the next 2,000 of qualified education expenses paid for the student. So that's where that 2,500 comes from. Now, the IRS does have an interactive tool to help you see whether or not your child qualifies, but I'm going to go through the eligibility requirements here as well. So, as I mentioned earlier, they have to be in the first 4 years of higher education. For the American Opportunity Tax Credit, the student must also be pursuing a degree or other recognized education credential in a post-secondary educational institution. Okay. And with that, it has to be an institution that is eligible to participate in the U.S. Department of Education Student Aid Program. All right. So if they can get Pell Grants, etc., then the school meets that criteria. The student has to be enrolled at least half time for at least one academic period beginning in the tax year. So when we look at academic periods, this can be a semester, a trimester, or a quarter, or even a summer school session. Okay, it just depends on how that school has it broken up. All right. Next, well, I've already gone over the first 4 years of higher education. They keep reiterating that. You'll see why when we look at the lifetime learning credit. You cannot have claimed this credit or the former Hope credit for more than 4 years. So the Hope credit was the foundation, like one of, if not the first, education credit that we had. Then they expanded that to become the American Opportunity Tax Credit because it's actually more beneficial. Okay. So if you claimed that in the past, took a few gap years and came back, if you'd already claimed the Hope credit for 4 years, you can't do the American Opportunity Tax Credit. Then the last one to be mindful of, the student cannot have a felony drug conviction at the end of the tax year. If they meet all the other criteria, but they have a felony drug conviction at the end of the tax year, they are not eligible for this tax credit. Okay. Now, when claiming the credit, you'll need Form 8863. What this form is going to ask for is how much was paid in qualified education expenses. So for most students, they're going to receive Form 1098T at the end of the year from their educational institution. This is going to show how much they, and when I say they, I mean the institution, received for qualified educational expenses. And it's going to also show how much was paid to the school on the student's behalf in the form of scholarships and grants. If it was paid for in the form of scholarships and grants, that is not considered as you or your dependent paying for those educational expenses. Okay, so typically we're looking at the difference between what tuition was and what was covered in scholarships and grants. Now, if you or your student paid tuition using a loan, that's going to qualify as you all still paying for the expenses. But something that is not covered, or sorry, something that does not qualify as an educational expense is the student's room and board. The reason being for the reason for that being, even if the student was not enrolled in school, they would have to pay for room and board no matter where they lived. So again, that is not a qualified education expense, and you want to make sure that that is backed out of that number. But what is covered are books, different fees, whether it's lab, now we have technology fees because computers have computer labs and all that type of thing. So back when I was in school, Amazon was getting very popular because they were reselling textbooks, right? They were connecting people, sellers and buyers with the textbooks. If you or your student are buying textbooks from a third party, keep those receipts because that is a qualified educational expense. Now, they don't cost as much as they did when I was in school, but if you need the advanced calculator for a calculus class or what have you, that is a qualified educational expense because that's a supply that's needed to be successful in the class. Okay? Now, when we're taking a look at this, you have to be very careful that the calculation is done correctly because if the IRS were to audit you and find that you actually weren't eligible to claim this credit, then you will have to pay back the amount of the American Opportunity Tax Credit that you received. And in addition to that, you'll also have to pay interest. Another thing that could happen is that you could be charged an accuracy related or fraud penalty. And then, worst of all, you could be banned from claiming the American Opportunity Tax Credit for 2 to 10 years. Okay. Now, if it had been disallowed for you in the past, you could potentially still be able to claim it, but you need to file Form 8862 to show that it was disallowed in the past, but why you should be able to claim it now. Okay. A few quick things about the American Opportunity Tax Credit. To claim the full credit, the modified adjusted gross income must be $80,000 or less. If you are married filing jointly, then the modified adjusted gross income must be $160,000 or less. So If that's not the case for you and your modified adjusted gross income is higher, as long as it's under 90,000 or under 180,000 for people married filing jointly, you can still claim the credit, but it will begin to phase out once you are at that 80,000 or 160,000. And by phase out, I mean it's reduced. So you wouldn't be able to claim the max that other people are eligible to claim because of the income level. Okay. So once you get over the 90,000 for your modified adjusted gross income or over 180,000 for married filing joint taxpayers, you can't claim it at all. All right. So let's take a look really quick at the lifetime learning credit. With this credit, the criteria is a little bit different and more people are able to tap into it. So students must be enrolled in an eligible educational institution. Okay, that's familiar, right? But they can be in undergrad, a graduate program, or even a professional degree course not pursuing a degree. This could be something that's required to improve their job skills, right? Then there's no limit on the number of years you can claim the credit, unlike the American Opportunity Tax Credit, where we can only claim that for 4 years for each eligible student. The lifetime learning credit is worth up to $2,000 per tax return. But keep in mind, this one is not refundable. But if we can get back money that we paid in already, it's still going to be a win, right? So for the lifetime learning credit, you, your spouse, or the dependent, whoever the eligible student is, has to have paid qualified education expenses for higher education. With these, the enrollment for this education must be at an eligible educational institution. And if it is your spouse or dependent, they have to be listed on your tax return. Okay. Now, again, there's an interactive tool that will help you see who's eligible for this credit. I'm going to go over it real quick here because, again, the criteria is a little bit different. They just have to be enrolled or taking courses at an eligible educational institution. So it doesn't matter if they're part-time, half-time, or if they're just taking a class for fun because they're a lifetime learner. Then the enrollment just has to be for at least one academic period beginning in the tax year. And again, this can be semesters, trimesters, quarters, or even summer school. Okay. The school is who's going to determine the academic period. They just need to be enrolled for that full period. The modified adjusted gross income is going to be the same as far as the income limits. So we are going to see the credit begin to phase out once we're at $80,000 for our, single head of household taxpayers. And then it's going to start phasing out at 160,000 for our married filing jointly and completely phase out at 180. Now, here's something I do want to mention. If you are married filing separately, you cannot claim either one of these credits. Okay, so it's only for people filing as single, head of household, or married filing jointly. To claim the lifetime learning credit, you also must file Form 8863. You are going to use the information from Form 1098T, which is the tuition statement that you receive from the higher educational institution. It will look the same. So we're looking at box one, the amount of qualified educational expenses that were paid to the university, and then we're going to see what was covered by scholarships and grants. Okay. If you didn't receive a 1098-T, you can reach out to the school to figure out why. They're not required to issue a 1098-T if during that period the student was enrolled in the course and no academic credit was rewarded. So essentially, if the student failed and they only took one course, no 1098-T is required to be furnished by the university. If all of the qualified education expenses were paid for entirely by scholarships or grants, then it does not need to be furnished because you wouldn't have any educational expenses that you paid, right? And then if the student is a qualified non-resident alien, then they are not required to issue a 1098-T. So I've already said this credit is up to $20,000 per return. What you want to keep in mind here, though, just like with the American Opportunity Tax Credit, we're looking at percentages, and this is a credit. So we have to look at the formula to calculate how we get that $2,000, right? So for the first $10,000 of qualified education expenses, they are going to be able to take 20%. So before you can max out that full 2,000 with the lifetime learning credit, you'd have to spend at least 10,000 of qualified education expenses. All right. So for example, let's say that you have the opportunity to go to a state school, you're an in-state student, and all you have to pay is $2,000 for the full semester. First, congratulations if you only get to pay $2,000. But second, your lifetime learning credit would not be $2,000. It would be 20% of $2,000 because we're taking 20% of the first $10,000. So if we only have 2,000, the lifetime learning credit you would have is $400, okay? Because that's 20% of the 2,000. All right. So that's going to go directly to any tax liability that you have. So I know that I went over a lot. However, if you check out the show notes, you will see a chart to help you understand the differences between the two credits. All right. If you have any questions, be sure to leave them in the comments, and I will see you all in the next episode, episode 80. I'd like to thank you for taking the time to listen today. I'd like to thank Jim Ray Consulting Services for helping me get this message out to you. I hope you found the information helpful. Did you know 1 in 50 people have a tax problem? Please share this episode with your friends and family because you never know who may need help. Again, thanks for listening. Hey, just as a reminder, this podcast is for informational and educational purposes only. It provides a framework and possible solutions for solving your tax problems, but it is not legally binding. Please consult your tax professional regarding your specific tax situation.